Why is AUDUSD falling today? You're staring at a trap, and 90% of traders are about to walk straight into it. Right now, Australian dollar to US dollar is priced at 0.6995, down 4 pips. But the real story isn't the number on your screen. It's the pile of weak longs that just got smoked below 70 cents, and the herd that's now chasing the break lower without a single hard level in mind. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end, because I'm giving you 3 exact levels you can trade tomorrow, complete with entries, stops, and targets that respect the volatility surge. The instant market verdict is a full-on risk-off fade. The trend across the 1 hour, 5 hour, daily, and weekly timeframes is a unanimous strong sell. We are not in a chop zone. We are in a momentum drive where every bounce is being sold and the Asia session just handed control to the bears. The bias is fading rallies until proven otherwise. Write this number down. If we break 0.6980 today and hold below it on a 4-hour close, the entire structure resets and we accelerate towards 0.6935. That is the invalidation level for any counter-trend hope. The herd is positioned heavily short near 0.7010, but they're crowded and complacent, and that congestion is exactly where a short squeeze spark could ignite. Keep 0.7009 pivot at the front of your brain. It's the line that separates a controlled grind lower from a vicious stop run. Now let's walk through the technical deep dive, top down. On the weekly chart, price is cracking below the 200-week moving average zone near 0.6887, but the current action is still well above that. The weekly trend is sell, and the monthly strong buy is an echo from weeks ago. Don't let that mislead you. The daily chart is a fortress of bearish momentum. The 20-day moving average at 0.71 is miles above us, and the 50-day at 0.7116 is acting like a ceiling we haven't touched in days. The 100-day moving average is at 0.7036, and that's the overhead magnet that will kill any rally attempt. Price closed yesterday below 0.7024, our R1, and today we are already testing the pivot at 0.7009 and rejecting it. The daily MACD is printing negative at minus 0.004 and accelerating. The signal line hasn't flattened at all, confirming that this downtrend has legs. On the 4-hour chart, you're seeing a series of lower highs and lower lows, with every push to the 20-period MA being swatted down. The ADX is 41.79. That's a trend strength reading that screams do not fade the momentum. CCI is at minus 137, deeply oversold. But in a strong trend, oversold can stay oversold while price just keeps leaking. Here's what most traders miss. Look at the 4-hour stochastic at 21 and Williams %R at minus 92. They are buried, yet no bullish divergence is formed. That tells you the momentum is so one-sided that oscillators can't even hint at a relief rally yet. The hidden divergence most people ignore is on the hourly chart. RSI is at 33 and making lower lows alongside price, which is a classic bearish confirmation, not a reversal setup. The critical support and resistance levels are clear. S1 is 0.6980, and it's already being tested. Below that, S2 stands at 0.6965, and S3 at 0.6936 is the final demand zone before a potential flush. Resistance is layered. R1 at 0.7024, R2 at 0.7053, R3 at 0.7068. The pivot 0.7009 is the immediate battleground. If you overlay the 100-day moving average at 0.7036 with a 1, that entire 0.7020 to 0.7036 band is a brick wall for any intraday bounces. And crosses it. The Aussie is moving tick for tick with iron ore futures and copper, both of which are sliding as China's demand narrative gets questioned again. When you see the offshore yuan weakening and the S&P 500 futures ticking red, the Aussie dollar becomes the purest risk barometer. It is the China proxy in full collapse mode. Let's connect the last 24 hours to this price action. The dollar is edging lower overall amid a shaky Middle East truce, which normally would offer a lifeline to risk, but the looming US inflation data is overriding everything. The market is terrified of a hot CPI print that would force the Fed to keep rates higher for longer, crushing the rate-sensitive Aussie. At the same time, the analyst sphere is buzzing with a note: Australian dollar to US dollar forecast, risk appetite rules, but NAB may yet move the Aussie. That is a direct reference to tomorrow's National Australia Bank business confidence data, which could completely alter the RBA rate expectations. Right now, policy divergence is widening. The RBA's tone is perceived as less hawkish, while the US 2-year yield is holding firm. The yield spread is squeezing the Aussie from both sides. The 1 to 2 week directional lean is further downside towards 0.6935 and potentially 0.6887, but that path is conditional. If tomorrow's US CPI comes in below expectations and the NAB data surprises to the upside, a violent short squeeze through 0.7009 would invalidate the bearish thesis and launch a rally into 0.7053. Do you think the Aussie breaks 0.6935 this week? Comment yes or no right now. I'm tracking consensus and I'll reveal the aggregated bias in tomorrow's video. Now we arrive at the money section, and most people skip this. That's exactly where the edge is made. Keep watching because I'm about to hand you 3 fully structured trade plans, each with a hard invalidation and risk-reward ratio built for this volatile environment. We'll go from sniper conservative to active mean reversion, and finally the high-risk aggressor for those who know how to manage tight stops. Strategy 1 is called the sniper, the conservative play. We wait for a confirmed breakdown, not a chase. The trigger is a 4-hour candle closing below 0.6980. That tells us the market has accepted price below the support, not just wickered through it. After that close, we exercise patience and allow a retest of the 0.6985 to 0.6990 zone. Once a 1-hour bearish rejection candle forms there, you enter short at exactly 0.6985. Your stop loss goes at 0.7010, just above the pivot and yesterday's congestion, giving you a 25 pip buffer against noise. Take profit 1 is at 0.6965, S2, for a quick 20 pip scalp and a 1 to 0.8 risk reward on that partial. But the real move is take profit 2 at 0.6936, S3, offering 49 pips and a total risk reward of 1 to 2.0 on the full exit. Invalidation is simple. If at any point a 1-hour candle closes back above 0.7024, the breakdown has failed and the setup is void. This sniper approach respects the trend without joining the panicked herd at the worst possible price. The sniper, conservative, entry, 0.6985, 4H close below 0.6980 plus 1H bearish retest, stop loss, 0.7010 take profit 1, 0.6965 take profit 2, 0.6936 risk, reward, 1:2.0 R invalidation, void if 1H close above 0.7024. Strategy 2 is the active trader, built for those who want to sell strength rather than breakdowns. This one exploits the gravitational pull of the pivot and the 100-day moving average. Wait for a pullback into the 0.7020 to 0.7024 supply zone, which aligns with A1 and the dynamic resistance of the MA100. The entry trigger is a 30-minute candle closing back below 0.7020 after a failed spike, showing rejection. Enter short at 0.7022. Place your stop loss at 0.7055, above R2, giving you 33 pips of room. Your first target is the pivot area at 0.6990, a 32 pip move, and when that hits, trail your stop to break even. The second target is at 0.6965 for a total of 57 pips and a risk reward of 1 to 1.7. This setup is invalidated if price pushes through 0.7053 with a 4-hour close, because that would break the lower high sequence and signal a short-term trend change. This active trader plan capitalizes on the most common behavior in a strong downtrend, the mean reversion before continuation. Type your Australian dollar to US dollar range for tomorrow in the comments now. Give me your high and low, and let's see who's aligned with the pivot gravity. The active trader, standard, entry, 0.7022, 30-minute close below 0.7020 after rejection. Stop loss, 0.7055 take profit 1, 0.6990, trail stop to be after, take profit 2, 0.6965 risk, air reward, 1:1.7 are invalidation, void if 4H close above 0.7053 strategy. 3 is the aggressor, a high-risk counter-trend long that only works if you're clinical with risk. Here's the idea. The market has hammered 0.6980 repeatedly, and oversold conditions are extreme. A false breakdown shakeout often triggers a rapid mean reversion spike. You set a limit by order at 0.6975, anticipating a wick below support that gets immediately bought. Your stop loss is tight at 0.6960, just below S2, giving you a tiny 15 pip risk. The target is the pivot at 0.7009, a 34 pip gain, and if momentum surges, you can scale out at 0.7020. That gives you a risk reward of 1 to 2.2. This is the only aggressor play I'm watching, and it comes with an explicit warning, only for those who can lose small and manage risk aggressively. If price closes below 0.6965 on the hourly, the floor is gone and you must be out. No hesitation. This setup thrives on the fact that the herd stop losses are piled right below 0.6980, and market makers know that the aggressor, high risk, entry, 0.6975, limit buy on false break wick, stop loss, 0.6960 take profit 1, 0.7009 take profit 2, 0.7020 risk, air reward, 1:2.2 are warning. Void immediately if 1H close below 0.6965 risk management pulse. Never risk more than 1 to 2% of your account on any single trade, and absolutely no positions through the US inflation release. Stops are non-negotiable. This is how you survive to trade the next big move, and the next one is already brewing. The single most critical level for the next session is 0.6980. A 4-hour close below, it opens the trapdoor to 0.6935 and potentially the 200-week moving average at 0.6887. A clean defense of 0.6980 paired with a NAB confidence surprise tomorrow flips the script and targets 0.7053. Tomorrow's wildcard is exactly that, the double-barreled event of US CPI and the NAB business survey. I'll be breaking down the full trade plan for that session, including the pre-CPI positioning and the gamma structure on the S&P 500 that's feeding back into the Aussie. If you want that complete breakdown, the video on Bitcoin and the S&P divergence is live now. Tap the end screen to watch next, because the risk asset shadow is deeply connected to this Aussie collapse. Smash like if this gave you a clear plan for tomorrow's open. Subscribe, hit the bell, and I'll see you in the next one before the market moves.